Hi guys, welcome back to my channel, and in this video we'll be looking at the forecast for this week. And like I said in my earlier videos, that I'm going to be trading just two pairs, EURUSD and SP500 indices and currency pair. So currently I'm looking at EURUSD. How I love to trade is to trade from a very big perspective where I can see the markets from the bigger time frame to the lower time frame. I call it the bird eye view perspective. Bird eye view perspective. You know, birds see a wide range of things because of the height they fly to. So I'm going to be going to the higher time frame all through to the lower time frame, so I can get an idea of what the market is saying, and that would inform my decision if I should buy or sell or stay away from the chart from the market this week. So now this is EURUSD. I'm going to the monthly time frame. Today is the 27th of this is 3 a.m. 27th, today is Monday, 27th of July 2026. So we have like 4 days, about 4 days to go before the end of the month. And the monthly candle is looking indecisive already. It's not giving any clear direction. And this is a very major key level. I've marked it out already with my rectangle bar. So this is a major key level, and let me try to get out my path to. Okay, let me use this. So this is the first place where price came to hit. After price broke out, it came back here to hit this key level. You know, as price action traders, we know that after a resistance is broken, it flips to a support. So that's what happened there. After this big bullish momentum candle came out, it came back here to test, and this resistance, this former resistance, became support. And then it couldn't come back lower. It went up again, came back. So basically, price has been ranging since the 2nd of June 2025. This is about a year ago. Price has been ranging in this zone. Price has been ranging in this zone, and this month is looking like. This month, this year, is looking like price wants to finally break out of this zone. It came back here to touch it again. Came back here to touch it, and couldn't break it. And finally, it threatened to break it here. I think this is the closest. Yeah, this is the closest it has come to breaking this former resistance. But it's too early to say that it has broken it because it's still around that zone. So we have to now wait for price action. We have to wait for a candle to come lower. And it could be, we have like 4 days to go. This month could just bring it down here. If the market should bring it down here to close below this level, if the market closes below this level for the first time in a year, then we know that this range is over. We have to now start getting ready to buy. I mean, we start getting ready to sell. I'm sorry. Start getting ready to sell all the way down here. And it's even better because if you zoom out, you see that we have another key level here. So what would most likely happen if price closes below this key level? Price would come down here and definitely react. It will not just come down and break this key level. It will come down here, test here, possibly go up a bit, and then come back again, come back down, and this time with full force. And if we should close below this level, then we are going to be eyeing all the way down here, all the way down here. And that is roughly, let me see how many pips, let me calculate how many pips. From where price is currently down here is about 1,000 pips, 1,100 pips. So all we have to do now is just to sit down and look at what price does. You just have to sit down and look at what price does. It's going to be very nice if this is what happens, but the market is based on probabilities. We cannot see what is going to happen in the market. So all we have to do is just sit on our hands and see what the market does. First thing that has to happen is the market has to break below this first key level, our first key level, which it is currently sitting at. Price has to break below that key level. So that's what the bird eye view perspective does. It gives you an idea of what is going to be coming up in the next couple of months. So that being said, we know that markets is looking bearish, like 70% bearish. Markets will also go up if price closes after this month or during this month end. Price closes above. We should just know that price is still ranging and we don't have anything to do. It's not nice to trade a ranging market, so just let it be. So if the market is ranging, I'm not going to be interested. If price closes above this key level, I will not be interested in trading EURUSD. So that's that. Let's zoom into the weekly time frame, so we have an idea of at least what is going on. We cannot trade on the monthly time frame. The monthly time frame just gives us an idea of direction of the market for at least the next couple of weeks. So the weekly time frame is telling us that price has sort of been ranging, but it has formed a trend line that has been broken. A trend line has been formed, which has been broken, which is an indicator that, okay, this level is getting violated. This key level is about to be smashed. Let me zoom in again to the daily time frame. So the daily time frame will give us a clearer picture. So this is the daily time frame. This is the daily time frame. This is the first touch, the second touch, and then the third touch that was broken, that broke the trend line. The third touch was supposed to take it higher, but instead it broke the trend line, which means there is bearish presence, bearish momentum building up in the market already. So all we have to do now is just to wait. Ideally, when the trend line is broken, it's always breakout, retest, and then continuation. Breakout, retest, continuation. So ideally, price is going back to test this trend line, to retest the trend line that was broken, and then it's going to drop. So what I'm going to do is I'm going to be observing the markets closely. So this is a 4 hours time frame. This is where we can now zoom out or zoom in to take our trade. This is a 4-hour time frame. So I'll be interested in this market if I get a candlestick confirmation right here at this trend line. If price comes and touches this trend line and gives a hammer, what we call a weak rejection candle, a bearish weak rejection candle around the zone, that's when I'm going to be interested, and then I'll be risking about 20 pips or so to make 40 pips. Remember, I said I'm going to be targeting always 1:2. So if price comes here and forms a bearish hammer candle, I'm going to go all the way there, targets down here as my profit, and then make it 1:2, put it right above here. My stop loss will be somewhere here, and then this is 1:2, and then write it down. So that is what I will be waiting for, and that is my bias for the Euro USD for this week. Anything other than this, I am not interested. Anything other than this, I am not interested. I'm going to carry you guys along as I place my trades. So all I have to do now is to wait for how price is going to react. Today is Monday. Mondays are not really ideal days to trade. So I have to wait for price to react around this zone. So if price breaks over this zone, this trend line that was broken, this was the point where the trend line was broken. So it has broken it now. And ideally, after the trend line is broken, it comes back to retest it, which I think is what is playing out now. Retest it and then further drop to the downside. So that's what I'm expecting. So all I have to do now, I will not jump into the sell trade. All I have to do now is to wait and see how price reacts here. The candlestick that will form around here in the next few hours will tell me if I should if I should sell or just stay out of the market. So if price goes all the way up, let's say price goes and breaks the zone and closes above the trend line in this 4 hours time frame, I know that this whole setup has been violated and it doesn't make any sense. So I'll just have to wait and see what the market does in the future. So for now, the only reason that I'll be selling this market would be if I get a confirmation candle here that shows me that, okay, price is about to turn around and react to the zone, and then bleed it all the way down. So that's it. So that's that on Euro USD. I'll be going to SPX. First of all, we go to the monthly time frame. SPX is a bullish instrument. It's always, like I told you, it always rises. Always. If you look at the historical data on SPX, that's always been rising. Always been rising. I've marked all the key levels. This is 2020. This is 2019. It has been rising, dipped, then rose, dipped, and then rose, dipped, rose. Now it's about to dip again. So now all we have to do is just to wait. The good thing about this SPX is that it follows patterns. So when it dips it goes back to a major key level. And now this is the next and closest key level. And it's going to be interesting. Let me draw a Fibonacci retracement to get a more precise idea of where it could most likely land. It aligns perfectly to the key level and drew out. Fibonacci is recent low to the recent high. So it aligns perfectly to 0.5 golden level aligns perfectly to this zone here, which is looking like the next key level. So all we have to do is to wait and see. We cannot buy here because this is like around all-time high, so we don't have enough data to inform us to buy at this point. So all we have to do is to wait. The only time we'll be interested, or I will be interested in buying SPX, is when it breaks out. When it breaks out of this zone. This is all-time high. So provided it doesn't broken out of that all-time high zone, like there has to be a candlestick that would close above this zone. That's when I'll be like, okay, I think the pullback is over, it's time to buy. But if this doesn't happen, if price is still playing around under this my red bar here, I'm not interested in buying SPX. Even though it's a bullish instrument, I'll only be interested if there is a very reasonable pullback, and that reasonable pullback has to happen when price drops around to this level, which is also our golden level, Fibonacci level. So if price comes here, trust me, and gives the perfect confirmation that I'm going to reverse here by leaving a weak rejection candle, and this is a monthly time frame, that is a very, very good signal. I'm going to go all in. Not all in, half plans. I have like my rules. I'm going to go in with my stipulated rules and lot size, and then ride it all the way up. So that is my analysis for the week, and we're going to come back next week or this weekend, because this is a new week. We're going to come back this weekend and give a review of how the market went. So thank you for watching. Please like this video, subscribe, and videos are going to get better in quality by every episode. So please like this video, share, support this channel, take it to your friends. Let's make money together. Let's make money together. So in summary, before I call it a wrap, EURUSD bearish, SPX also bearish, and all we have to do is just to wait patiently, because if you force trades that are going to sell now, I'll be risking my account. So we have to wait for the market to align and tell us what to do next. And overall, it should be bearish, and this is what I planned to do when price gets to the zone. So I'll see you next